Hi, welcome to Import. In this video, we are going to cover the numericals of contract costing. But before that, let's have a look at some most important terms which will be used in these numericals. So, first of all, we have the term escalation clause. Now, what is this escalation clause? In case if some change in price of material or labor is expected, escalation clause is given in the contract to safeguard the interest of both the contractor and the contractee. That is, it is the clause which says that if the price of material or labor changes during the execution of the contract price will be suitably adjusted. The purpose of this escalation clause is to avoid any future disputes among the contractor and the contractee. Now, before moving further, I just want to recap few more terms which we did in previous video, because these terms will be used in numericals further. So, one term which we did was, I suppose we did work certified. So, what is this work certified? Now, work certified is, for example, if we have completed certain percentage of contract, it is not necessary that whatever work is done by the contractor, that is certified by the contractee. Now, contractee appoints an architect or a surveyor who checks whether the work has been done according to him or not. So, whatever percentage of work is completed by the contractor, the architect or the surveyor of the contractee certifies the work. So, work certified is the work certified by the architect of the contractee. Work uncertified. Next is work uncertified. So, work uncertified means the work not certified by the contractee, surveyor of the contractee. And we have cash received. Next is cash received. Now, what is this cash received? Cash received means if the work is certified by the surveyor of the contractee has to make the payment for that. But the contractee never makes the full payment. He makes certain percentage of payment to the contractor certain percentage, and this percentage is always the percentage of work certified, right? So, cash received is always the percentage of work certified. Now, moving further, okay, let me explain you the format of contract account. First of all, contract account is always prepared in the books of contractee. Books of contractor, Accounts are always prepared in the books of businessman, right? So, here the businessman is contractor. So, contract account is prepared in the books of contractor. Now, what is the general practice? Two things can happen. Now, what is that? One, if the contract is fully complete, what do we do here is we credit the contract price here by contract price, because that is our income. We will receive the contract price, right? And we deduct all the expenses. So, we deduct all the expenses to get the profit. So, these expenses include like material, labor, depreciation of plant, etc. Right? We deduct all the expenses and we get the profit of the contract. This is the contract price, this is our income, and we are deducting all the expenses, or we are deducting the cost, right? These expenses are cost. So, income minus expenses or cost, we will get the profit of the contract. This is how we calculate the profit of contract. But this happens only when the contract is fully complete, and this profit is transferred to profit and loss account further. But what if the contract price is not fully complete? If the contract price is not fully completed, then we say that this contract is an incomplete contract. For example, say we close the books of account on 31st March. There may be certain contracts which are not complete as on 31st March. Such contracts are known as incomplete contract. Now, how do we treat incomplete contract? So, this is for incomplete contracts. Now, the contract is incomplete. We cannot credit the contract price here because we are not going to receive any contract price in that case. On the closing date of financial accounts, we have not received the contract price, so we cannot show it as an income. So what we will credit here is, we'll credit by work in progress because the contract is not complete, right? So by work in progress, and this work in progress includes value of work certified plus cost of work uncertified, right? Value of work certified plus cost of work uncertified, that is, so we can record the amount here, right? Now so this is by work in progress. Now, why we are showing value of work certified and cost of work certified, this I'll tell you just a moment. Now, we are going to debit all the expenses here. So, expenses means all the cost which we have incurred. So, expenses here involves two types of expenses. It is just material, but we have paid material for the work which is certified, and we have spent on the material even if the work is not certified, but we have incurred such expenses. So these expenses include cost of work certified, and it also includes cost of work uncertified, because although it is not certified by the surveyor of the contractor, but we have incurred the expenses. Now, so if you check this is cost of work certified. This and this gets cancelled. Now this is value of work certified minus the cost of work uncertified. We will be left with the profit, and this profit means the profit of work certified. So what is a contract account? Contract account shows, I'm writing here, contract account shows the profit of work certified, right? So that is why in work in progress we show value of work certified. Value of work certified means cost plus profit. So this is cost plus profit minus the cost of work certified. We are left with the profit of work certified, and this gets cancelled. So here on the debit side we show all the expenses which we have incurred, and the expenses includes the expenses for work certified and the expenses of work uncertified. So actually this gets cancelled and we are left with the profits of work certified only. Now these are certain rules and regulations for notional profits. Now what is this notional profit? First of all, notional profit represents the difference between the value of work certified and the cost of work uncertified. So that means value of work certified, right? Value of work certified minus the cost of work certified. So we get the profit of work certified, and this profit are also known as notional profits. So notional profit is the value of work certified and the cost of work, difference between the value of work certified and the cost of work certified. Now profits on incomplete contract. How do we treat the profits of incomplete contract? Now once the contract is complete as on the end of the financial year, we transfer those profits to P&L account. But what are the rules which we generally follow if the contract is not complete? So following rules are being followed. First, profits should be considered in respect of work certified only, and work uncertified is always valued at cost. This I have already explained to you. In work in progress, we use the value of work certified and we take the cost of work uncertified so that we can get the profit of work certified. So next is, no profit should be considered if the value of work certified is less than 1/4 of the contract price. Now if let's say the contract price is 1 lakh, right? Contract price is 1 lakh. Now the contract price is 1 lakh. No profit should be considered if the value of work certified is less than 1/4 of the contract price. So let's say this is a contract price. Now work certified is, let's say, 2 lakh. So 1/4 of contract price means 25%, and it comes out to be 2,50,000. If the value of work certified is less than 1/4 of the contract price, which is 2 lakh, and the 1/4 of contract price is 2,50,000, no profit should be transferred to P&L account. In this case, we do calculate profits in contract account, but we are not going to transfer any profits to profit and loss account in this case, because we have not completed even 25% of the contract. So it is too early to transfer the profits of such contract to the profit and loss account and pay taxes on that. So we should not, it is too early to predict the profits, so we should not transfer any profits in this case to profit and loss account. Next, if the work certified is 1/4 or more but less than 1/2 of the contract price, say in this example, the work certified is more than 2,50,000 but it is less than 1/5, less than half of the contract price. So half of the contract price is 5 lakh. So if the work certified is more than 1/4 but less than 1/2, say around 3 lakh, 3,50,000, 4 lakh, it is more than 2,50,000 but less than 5 lakh. So in this case, 1/3 of the profit as reduced by the percentage of cash received should be transferred to profit and loss account, and balance should be treated as reserve. So now let's say, for example, our profit is, right here, let's say our profit is, we have made the contract account and notional profits comes out to be 80,000. Okay. In this case, we will transfer 1/3 of the profits. So 1/3 of this as reduced by percentage of cash received. So let's say percentage of cash received is 80%. We have received only 80% cash. So 80% means 80% of work certified. So multiply by 80%. The amount which we will get will be transferred to P&L account. So this comes out to be 80,000 divided by 3 into 80%. That comes around to be 21,333. So it comes out to be 21,333. So this amount will be transferred to P&L account, and remaining 80,000 minus 21,333, 21,333, the remaining amount will be kept as reserve. Now the next rule, if work certified is more than half, that means as per our example more than 5 lakh, then 2/3 of the profits will be transferred to P&L account and balance will be treated as reserve. So 2/3 into notional profit into percentage of cash received, that will be transferred to P&L account, and rest you'll get better understanding when we will do numericals of this. So rest will be transferred to reserves. And in case if the contract is very much near to completion, the total cost of completing the contract should be estimated. The contract price, we know that, and we estimate the total cost and we transfer the full profits to the P&L account. We can transfer the full profits to P&L account, right? Now let's do a question. Let's say what this question say. Utkal Construction Limited took a contract for road construction in 1994. The contract price was 10 lakh and it is estimated that the cost of completion would be 9,20,000. So estimated cost of completion is 9,20,000. In case if we complete the contract by the end of financial year, 10 lakh is the contract price, which is our income, and minus the cost of completion, that is 9,20,000, we'll get profit of 80,000, right? At the end of the company would be 9,20,000. At the end, company received 3,60,000, representing 90% of the cash received, 90% of the work certified. So that means the company has received, at the end of the financial year, the company has received 3,60,000. Received 3,60,000 means this is the percent, 3,60,000 is the cash received, representing 90% of the work certified. That means we have received 90% cash, and this 90% is always the percentage of work certified. Work not certified was rupees 10,000. Expenditure incurred on contract during 1994 was as follows. Material, labor, plant, material costing 5,000 were damaged and disposed of for rupees 1,000. Plant is considered having depreciation by 25%. Prepare the contract account. Now, how do we prepare contract account? First of all, for preparing the contract account, we need value of work certified, value of work certified. So how do we calculate the value of work certified? We know that we have received 3,60,000 cash and it is percentage of cash received. 3,60,000 cash received is the percentage of work certified. So we can calculate the value of work certified into 100 by 90. So 3,60,000 into 100 by 90. 3,60,000 into 100 divided by 90. This comes out to be 4 lakh. Right? So value of work certified is 4 lakh. Now you can check also. Work certified is 4 lakh. Work certified is 4 lakh. And if 90% is received, we received 90% cash, then cash received is 3,60,000. Right? Vice versa. So now let us do this question. We are going to prepare contract account. This will be in the books of contractor, that is Utkal Construction Limited. Utkal Construction Limited. Right? Now, debit side, credit side. First of all, I'm going to write here by work in progress. So work in progress is equal to value of work certified plus cost of work uncertified. We have just calculated the value of work certified, that is 4 lakh, and value of work uncertified is given in the question. See, value of work not certified is 10,000. So it is 10,000. Perfect. Now we are going to write all the expenses on the debit side. So let's see what all expenses we have. First of all, material 50,000, to material to material, I'll write here to material, this is 50,000, but we are also given that material costing rupees 5,000 were damaged and disposed of, but the material worth rupees 5,000 was damaged. So that means in this particular contract we have used only material worth rupees 45,000. Although this is a loss of rupees 5,000, but this is an abnormal loss and it will be transferred to profit and loss account. It will not be shown anywhere in contract costing. Only we are going to only thing that which we are going to do here is we are going to deduct the cost of material damage from the cost of material. So 50,000 minus 5,000, we are going to show 45,000 here. That is, we have used only material worth rupees 45,000 in this contract. Now, labor 3 lakh. So labor is 3 lakh. Anything else? This we have already done. Damage and was disposed of for rupees 1,000. So material damage was 5,000. For 1,000 we have disposed of the damaged material. So that means the actual loss is 4,000, which will be shown in P&L. This loss is not to be shown anywhere in contract costing, right? So plant is considered having depreciated by 25%. So let me check what is the value of plant. It is 20,000. So depreciation is 25%. That means around 5,000. So we will show the depreciation of plant to depreciation. $5,000. That's it. Now we are going to calculate the profits. So profits are 4,10,000 minus 45,000 minus 3,05,000. 3,05,000. So this is 60,000. To profit, again total of credit minus the total of debit, we'll get the profit. So profit, this profit is a notional profit because we have not yet received these profits. So hypothetical profits, we are expecting 60,000 profits. Now total is 4,10,000. Now out of these 60,000 profit, certain percentage of profit will be transferred to P&L account and the rest will be kept as reserve. Now how much profit will be transferred to P&L account? For this we will have to apply the rules of notional profits. So what rules say is, if the contract price is if the value of work certified is less than 1/4 of the contract price, no profit will be transferred to P&L account. If the value of work certified is more than 1/4 but less than 1/2, 1/3 of the profit will be transferred to P&L account. So let me check how much is the value of work certified. It is 4 lakh. So 10 lakh into 1/4, that comes out to be 2,50,000. But our work certified is 4 lakh, right? So that means it is more than 1/4. So I'm going to write here, I'm going to write here in working notes. right? So since value of work certified is more than 25% of contract price, therefore 1/3 of profit will be transferred as reduced by the percentage of cash received. So I'm going to calculate here 60,000 into 1/3 into percentage of cash received is 90%. So this amount will be transferred to P&L account. 60,000 divided by 3 into 90%. So 18,000. 18,000 will be transferred to P&L account. So I'm writing here to P&L account 18,000, and remaining is 60,000 minus 18,000 comes out to be 45,000 to reserve. This is known as reserve for unrealized profit, that is 42,000. So out of 60,000 profit which we have earned, 18,000 is transferred to P&L and 42,000 is kept as reserved. So this is all, and here we are going to write down by profit brought down 60,000, and we have done the division here. So answer is 60,000. So we are done with the question. Now moving on to the next question. Let's read it first. Nikhil Limited undertook a contract for ₹5 lakh on 1st July 94. On 30th June 1995, when the accounts were closed, the following details were given. Material purchased 1 lakh, wages paid 45,000, general expenses 10,000, blah blah blah. All the expenses we are given with the work certified, accrued wages, cash received, work uncertified, depreciation on plant. So we are given with the cash received also, we are given with the work certified, and we are given with the work uncertified. Now, the contract contained an escalation clause which read as, so this is a question related to escalation clause. So what is an escalation clause? I have already discussed that in case if there is sudden rise in price of material or rise in price of labor, in order to avoid dispute, we enter a clause in the contract that in case of increase in price of material or labor, the contract price will be suitably adjusted. So this is the escalation clause. So what is given here? In the event of increase of prices of material and rates of wages by more than 5%, the contract price would be suitably increased accordingly. So we are given that in case if the price of material or wages increases by more than 5%, if it is increasing till 5%, we are okay with it. But if it increases more than 5%, the contract price will be also increased, right? Accordingly. Now how much, what is the percentage of increase in contract price? Will be increased accordingly by 25% of the rise in cost of material. So it is, the contract price will increase by 25% of what? Rise in the cost of material and wages beyond 5%. Right? So we will calculate this, we will do this, and you will have better understanding. Now let's prepare a contract account. This is the journal format. We all know that we have to write by work in progress, which includes value of work certified plus the cost of work uncertified, right? So I'm going to write here, what is the value of work certified? This is value of work certified 2 lakh, and value of work uncertified is 15,000. So let's write it, 2 lakh, and then we have 15,000, right? Now we are going to write all the expenses. So material purchased to material purchased, sorry, this is 1 lakh. Now we are given with material in hand on 30th June is 25,000. That means in this particular contract we have used material worth rupees 75,000 because this is the closing value of material. So 1 lakh we purchased and 25,000 is still left with us. So that means the material used or material consumed. We always take material consumed here, sorry. So material consumed is 1 lakh minus 25,000. That comes out to be 75,000, right? So material consumed in this particular. Now we have wages paid 45,000 and we have accrued wages 5,000. So total wages, 2 wages 45,000 plus outstanding or accrued wages are 5,000 not yet paid. So it comes out to be 50,000, right? Then we have general expenses 10,000. Expenses 10,000. Then we have plant purchase 50,000. We are nothing to do with plant purchase. We need depreciation of plant. So depreciation of plant is 5,000. To depreciation of plant. $5,000. So we are done with the information given till here. Now there is an escalation clause. Now escalation clause, in case of escalation clause, the prices of material, it is used only when the prices of material or the prices of wages increase. So we will increase the contract price, and if the contract price will increase, it is our income. So whatever is the value of escalation clause, we will show that value in credit side of the contract account as a income. So by escalation clause, I am writing here, by escalation clause. So we have to calculate the value of escalation clause. Now let's see what is the escalation clause. This is the escalation clause. Let's do. I'm going to calculate the value of escalation clause for you people. Working note for escalation clause. So this is the working note for escalation clause. Now what was the escalation clause? It says that in the event of price of material and rates of wages increase by more than 5%, the contract price will be increased accordingly by 25% of the rise in cost of material and wages beyond 5% in each case. So that means we have to calculate the rise in price of material and wages first, so that once we get to know how much is the rise in price of material and wages, then we will increase the contract price by 25% of that amount. So let's check. So I'm going to do working note A here. So material, value of material consumed, value of material consumed in the contract. It is 1 lakh minus 25,000 is equal to 75,000. I hope you are clear with this. Value of material consumed is 75,000. Right? Now, so this 75,000 is the increased price. So we have to calculate the amount of increase first of all. So let us say that let original price be 100. Now the escalation clause says that, let's check the escalation clause. It was found that since the date of signing the agreement, the price of material, so price of material and the wage rates increased by 25%. So the price of material and the wage rate has increased by 25%. So let original price be 100. So we know now that the price of material has increased by 100%. Therefore, increase is 25%. So 25% of 100 is 25 only. So increased price is now 125. Hope you got it. See, let the original price be 100. We don't know what is the original price because this is an increased price. So we have to calculate the original price. Now the difference between the original price and the increased price, we will get the amount of increase, right? So we don't know the original price. We are assuming original price to be 100. If 100 is the increased price, we know that the price of material and the rates of wages increased by 25%. So 25% increase means 25% of 100 is 25 only. So increased price is 125, right? Now we are going to calculate if 125 is the increased price, 25 is the total increase in that. If increased price is 75,000, how much is the increase in this? So this is equal to, this comes out to be 25 upon 125 into 75,000. So that means the value of material increased by 15,000. Value of material increased by 15,000. Now total increase in material is by rupees 15,000. Up to 5%, we are not going to increase any contract price. So increase up to 5%. Increase up to 5% is 75,000 into 5 upon 125. This comes out to be 3,000. So 3,000 is increase up to 5%. So beyond that, beyond 5% increase, beyond 5% increase is 12,000. Increase beyond 5% is 12,000. So this is increased in price of material beyond 5%, 12,000. Similarly, we will calculate for wages as well. I'm going to calculate here as we don't have any space. It's a bit technical. I'll explain this again once we'll complete the calculation. So working note. Increase in wages. So what is the increase in wages? Let the original wages be 100. So we know that the price of wages increased by 25%. So 25% of 100 is 25. So therefore increased wages is equal to 125. Sorry, 125. Increased wages are 125. If 125 are increased wages, out of that 25 is the increase. If the total wages are 50,000, so how much is the increase? This is 25 upon 125 into 50,000. It comes out to be 50,000 into 25 divided by 125. This is 10,000. Total increase in wages is 10,000. Increase beyond 5% we have to calculate. Five upon 125 into 10,000. 5 divided by 125 into, yes, I'm taking 10,000 here, the value is 50,000. So increase beyond 5% is, increase beyond 5% is 2,000. So net increase, therefore net increase is equal to 10,000 minus 2,000 is increase up to 5%, so net increase will be 8,000, right? So increase in value of wages beyond 5% is 8,000. Now let's move on to the escalation clause once again. What we have done till now. The contract contained an escalation clause which read as, in the event of increase in price of material and rates of wages by more than 5%, that is, if the price of material and rates of increases up to 5%, then the contract price will not get changed. But if the increase is beyond 5%, the contract price will be increased by 25% in the rise of cost of material and wages. Beyond 5%. So that is why we have calculated the increase in price of material and increase in price of wages beyond 5%. So up to, first of all, we calculated the increase in price of material and wages. How did we calculate it? Look at, have a look. It was found that since the date of signing the agreement, so when we signed the agreement, since that date, the price of material and wage rates increased by 25%. So up to 5%, the contract price will not get changed, but beyond 5%, whatever is the increase in price of material and rate of wages beyond 5%, we have to calculate that value first, and the contract price will be increased by 25%. So whatever is the total increase in the price of material plus total increase in the price of wages. So increase in price of material, writing here, increase in price of material beyond 5% was rupees 12,000 and increase in wages beyond 5% is 8,000. So total increase beyond 5%, total increase beyond 5% is 20,000. Increase beyond 5%. So we have calculated the cost of material and wages beyond 5%. We have calculated the rise of the cost of material and wages beyond 5% is 20,000, and the contract price will increase by 25% of this amount. So 25% of 20,000 is equal to 5,000. So amount of escalation clause is 5,000, right? So I'm writing here the amount of escalation clause is 5,000, and we are done with the question now. So let me calculate the profit. This is 2,15,000 plus 5,000 comes out to be 2,20,000, and here the total is 75,000 plus 50,000 plus 10,000 plus 5,000. 1,40,000 minus 2,20,000. The profit is again 60,000. So writing here to profit amount is 60,000. Total is 2,20,000. Account closed. Now, out of this, some profits will be transferred to P&L and some will be kept in reserve to P&L and to reserve. So let me check the percentage of work certified. So work certified is 2 lakh and the contract price is 5 lakh. So it is more than 1/4 but less than 50%. So 1/3 of the profit will be transferred to P&L account. So I'm calculating here. Where should I write? I'll write here. 1 second. 60,000 into 1/3 into percentage of cash received. So what is the percentage of cash received? Cash received is 1,50,000 of 2 lakh. So let me calculate the percentage. 1,50,000 divided by 2 lakh into 100. So 75% is the percentage of cash received. One-third into 75%. So this comes out to be 60,000 into 60,000 divided by 3 into 75%. So that is 15,000. So 15,000 will be transferred to P&L account and rest 45,000 will be kept as reserve. This is the answer. Now the next question. So let's directly solve this question. We know the format now. Contract account in the books of whatever the name of the company is. Format, this is the format. Right. So Hindustan Construction Limited has undertaken a construction of bridge over Yamuna. The value of contract is 12,50,000. This is the contract price, subject to the retention of 20% until 1 year. So that means they will retain 20% of the amount, and rest 80% will be paid. So percentage of cash received is 80% in this case. Labor 4,05,000. Material direct to the site less returns. So 4,20,000 is the material from store. Even if we are getting material directly from the site or we are taking the material from the store, but total material used will be 4,20,000 plus 81,200. So let us write, and we are given with material in hand on 30th June, that is closing material, which will be deducted from the material consumed. Wages accrued on 30th June outstanding will be added to the amount of labor. Direct expenses are given. Work not yet certified 16,500. Amount certified work not certified is 16,500 and work certified is 11 lakh. So let us start the question with work in progress. By work in progress. So value of work certified plus cost of work uncertified. Right? So value of work certified is given to you. It is 11 lakh and it is 11 lakh and cost of work certified was, I suppose, 16,500. So it is 16,500. Now write down all the expenses. To labor plus outstanding to material direct to site and from store, both will be included. Then we are given with, so what was the value of labor? I suppose it was, let me check, value of labor is 4,05,000 and outstanding wages are 7,800. So 4,05,000 plus 7,800. 4,05,000 plus 7,800 is equal to 4,12,800. Material is 4,20,000. Plus from store it was 81,200. So 4,20,000 plus 81200, it is 501,200. 501,200. Right. Next we were given with the hire and use of plant. So these are rent charges of plant. To hire of plant, this is just like depreciation only. The amount is 12100. We are given with the direct expenses. Direct expenses are 23,000 plus outstanding direct expenses are given to us 1,600. So total is 24600 Now what all expenses are given to us? Let me check. Yes, we are done with this. General overheads not yet included, so write down general overheads to general overheads. So general overheads are 37,100. I think we have included all the expenses. Now we are going to calculate. Oh, sorry, we have not included one. We have skipped one expense. This is material in hand on 30th June. Either you can deduct this value from the cost of material, or you can also show this as closing stock on the credit side. By closing material, this is 6,300. Right, now we are going to calculate the profits, add all the credits and then deduct debits from here. So you will get the profit to profit. So profit is 1,35,000. 1,35,000. This is the profit. Total is 11,22,800. 11,22,800. Now by profit brought down, so it is 1,35,000. Now we have to transfer the profits to P&L and some to reserve. That depends upon the conditions of profit. So 1,35,000. 1,35,000. Right. Now, how much profit is to be transferred? Let me check the condition. What is the percentage of work certified? So amount certified is 11 lakh and the contract price is 12 lakh. So it is more than 50%. So 2/3 of the profit will be transferred to P&L account. Let me calculate. Profit is 1,35,000 into 2/3 into. Now what is the percentage of cash received? We have received 8,80,000. Percentage of cash received. That means percentage of cash received is 8,80,000 divided by 11 lakh into 100. So percentage of cash received is 8,80,000 divided by 11 lakh into 100. So it is 80%. So 80% is the cash received. Now 1,35,000 into 2 divided by 3 into 80%. So 72,000 is equal to 72,000. So that means 72,000 will be transferred to P&L account and rest will be 72,000 will be transferred to P&L account and remaining profit, that is 63,000, will be kept as reserve. So this is the net answer. Thank you.